welcome to the next webinar in a series entitled Winning Business Strategies, sponsored by Brady Ware and Sibley, Shillitoe & Dyer. My name is Brian Jacob, and I'll be your moderator for today's webinar, Employee Fraud, Prevention and Remedies, Could It Be Happening in Your Business? Today's session will review common fraud areas that occur in closely held businesses, how to prevent them, and what your legal remedies are if you are a victim of fraud. Our speakers today are Marty Beyer and Randy Domigan. Marty Beyer is a shareholder for Sibley, Shillitoe & Dyer. He concentrates on fraud embezzlement, real estate, collections, and family law matters. Marty has won many jury trials, bench trials, and appeals. He represents a wide range of clients, including individuals, small businesses, and one of the nation's largest banks. Marty received his BA from Hillsdale College and his Juris Doctorate from University of Dayton. He is a member of the Dayton and Ohio Bar Associations. Randy Domigan is a manager at Brady Ware and focuses on providing businesses and individuals with accounting and tax compliance services, in addition to working in the areas of fraud investigation and internal control consulting for small businesses. He works extensively with a variety of industries, including manufacturing, distribution, resale, wholesale, professional services, transportation, and real estate. Randy graduated from Wright State University, received his CPA certification from the state of Ohio in 1996, and his CFE certification from the Association of Certified Fraud Examiners in 2009. Randy is a member of the Ohio Society of Certified Public Accountants, the American Institute of Certified Public Accountants, and the Association of Certified Fraud Examiners. We'll be taking questions today via the chat feature in the webinar program located on the bottom right side of your window. In the interest of time, we have muted your phone and will answer your questions during the webinar and/or address your questions after the webinar via a link to our website. With that, we'd like to welcome our speakers, Marty and Randy.
Thank you, Brian. Brian, thanks very much. And all you listeners out there, what we're going to do, first of all, in an embezzlement thing is show to you that embezzlement can happen anywhere. Our firm was an embezzlement victim. We had one of these fine ladies here embezzled almost $300,000 from us over 6 years. And so what we're going to do is take a little vote to see which one do you think was the party who was guilty of embezzlement. So there should be a polling feature, and what we'll do is we'll go back and we'll go from left to right on your screen, number 1, number 2, 3, 4, and 5. And so I'm going to click on, if you look on, there's number 1, okay, number 2, number 3, number 4, and number 5. And so what I'd like you to do is we're going to bring up the polling feature, and you can vote which person you think it is. So tally those and take a minute to think again left to right to see whom you think the guilty party is. I will tell you that this person ended up being sentenced to 4 years in prison. She got out 2 years early on good behavior. She was a member of our accounting department, started really when she was, I think, 18 years old, worked for several years, and was ultimately promoted to our accounting area. She accomplished this fraud through a number of things, mainly paying and falsifying expense reports and having us pay her bills. So we're conducting the poll, and so it looks like we've got a number of people who have voted already, and pretty evenly matched among the first 4. Number 5, ironically, has no votes, which is a good thing because that is our office administrator. So here's the polling, and we'll go back to the picture, and it looks like okay, bear with me. All right, we had the votes are pretty much evenly split among the first 4 contestants. Irana and number 3, who is not looking at the camera, incidentally, is not it. It's right here. Number 4 is our lucky person. As I said, she embezzled settled over $280,000, almost pretty much we figured close to $300,000 over 6 years. So with that, I will now turn it over to Randy.
All right, great, thanks, Marty. One of the statistics that I just wanted to share with the group or the audience is on a survey that was conducted by the Association of Certified Fraud Examiners and was reported recently in their 2010 report to the nations on occupational fraud and abuse. For companies with under 100 employees, the average cost per occurrence of fraud is $155,000. Now that's a pretty staggering statistic considering the current economic climate, and some companies are just struggling to keep their heads above water. So to think that a fraud could be occurring in your company at this cost is pretty disheartening.
And Randy, that's a good point. Also, I'll note that University of Dayton professor Janet Greenlee issued a study about 2 years ago on nonprofits and embezzlement, and she concluded that the nonprofits suffer about $40 billion a year in losses from fraud, and that's about 6% of all net revenue. And it's happening today. Just this same month, a 67-year-old lady here in Dayton was sentenced to 3 years in the federal pen for embezzling nearly $500,000 from the Antioch Shrine. So it happens everywhere.
Yeah, Marty, that's a good point. It's those individuals that you least expect would commit such a crime are the ones that you really have to watch sometimes. A 67-year-old woman would not be someone that you would really suspect that would be capable of doing such a thing. So I'm going to start off my end of the presentation with just kind of an overview of what I'm going to talk about. So the first thing I'm going to go through is just the various fraud categories that are classified by the Association of Certified Fraud Examiners. There's 3 categories. We're going to go through those, give an example of each of those. The one that we're going to focus on really during the presentation is asset misappropriation. Asset misappropriation is really probably the biggest fraud that occurs out there, and so we're going to dive into that a little bit. We're going to talk about some of the motivating factors that can motivate employees to commit fraud, and then we're going to talk about ways that we can prevent it. So we're going to start off just by looking at the different categories. The first category we're going to look at is corruption. Corruption would be schemes involving conflicts of interest, and this would be, for purchasing agents or salespeople, where they just have a conflict of interest and they're getting some kind of benefit there. Obviously you have bribery where they get kickbacks and where there's bid rigging going on, also illegal gratuities and economic extortion. On the asset misappropriation side, this can happen with cash, checks, etc. Also with non-cash inventory, and also it covers fraudulent disbursements. The third one we're not going to really get into a lot, but I just wanted to make you aware of it, are really just frauds related to fraudulent statements. And those on the financial side would be, situations with revenue recognition fraud, and on the non-financial side, just with internal and external document reporting with fraudulent information, and then fraudulent employee credentials. Again, some of the most common are asset misappropriations where a company could have exposure, and so those are the ones I felt I really wanted to cover in today's seminar. There are 9 subcategories within the asset misappropriation area, and we're going to go through each of those. The first one I wanted to talk about is skimming. And what skimming is where cash is essentially stolen from a company before it ever gets recorded on the books. This essentially no sale gets recorded, so these are sometimes really hard to detect. The second one is cash larceny, and this would be where cash is stolen after it has actually been recorded. So, for example, if you have a bank deposit that you're giving to somebody to go to the bank, the money is actually taken at that point. The next one I'm going to go through is billing, and billing schemes are actually one of the most common within asset misappropriation. And this occurs when an employee has a payment issued by submitting invoices for fictitious goods and services, or inflated invoices, or invoices for personal purchases. They could even go to the extent of setting up a shell company that would actually bill the company that they work for, or they just submit bills for personal items to get paid out of company funds. The next one, which is also fairly common, is just expense reimbursements. And this is when an employee turns in an expense report for reimbursements or fictitious or inflated business expenses. This would essentially be for personal expenses that they're putting on their company credit card, or they're submitting these on an expense report that really had no company purpose. The next one we're going to look at is check tampering, and this is where a person steals by intercepting, forging, or altering a check drawn on one of the company's bank accounts. This is basically when stolen checks are made out to an employee or one of their accomplices, or an employee steals a check going to a vendor and then deposits it in their own account. The next one, which is also not quite as common, but it can happen, are payroll frauds, where payroll payments are made that are not correct. So essentially, if you have incorrect time that's submitted, overtime that's being paid that really isn't approved, or if you have somebody in your payroll department that has set up a ghost employee. And that's basically where they're able to add an employee that really doesn't work for the company to the company's payroll, and when that payroll check gets issued, they go ahead and take that check and deposit it in their own account. The next one we're going to look at are cash register disbursements, and this really is more prevalent for companies that are in the retail side of practice, where they have an employee that makes false entries on a cash register, where they have a false void or something else where they take money out of the cash register and try to conceal it by modifying the cash register to try to cover it up. The next one is cash on hand misappropriation, and this is where an individual steals cash from the employer premises. So if you have cash sitting in a vault, or you have it sitting someplace that's accessible to employees, the money essentially just walks out. The next one is non-cash misappropriations, and for companies that have inventory, they have a warehouse, or they have inventory that can be resold, or companies with metal products that recently have been very much needed in the open market, where they can be sold pretty easily. This really covers those type of frauds, and this is basically just where an employee takes money, again, from the warehouse, or they could, it could even be customer information that gets stolen, because that's obviously very valuable to a company as well. Next area I'm going to look at is just some of the motivating factors behind why employees commit fraud. And the reason we're really looking at this is, obviously business owners and CFOs and such are not always privy to everything that goes on with their employees, but a lot of your other employees are. And, if any of these things that you hear about, it should at least make you aware that, there could be a potential for somebody to commit fraud. One of the number one factors is an employee living beyond their means. If you see your employee and you know that they're making $30,000 a year and they show up to work in a Mercedes 500 SL convertible, that's probably a pretty good sign, that, not always, but, that there may be something going on there, that they're able to afford such a luxury car.
That's an excellent point, Randy. I remember in our case, our employee built a pool in her backyard, and also had a new minivan. I remember driving to work, and I saw her next to me, and I thought, her husband must be doing pretty well to afford that pool and that new minivan. But yeah, I guess it was the pool that Sealy bought.
No, absolutely, Marty. The next thing, when there's medical bills that, one of your employees has a loved one that has contracted a fatal disease, or something that's potentially curable, but the medical costs are just somewhat insurmountable. That's definitely an area that you need to be aware of, because if an employee looks at that and it's their loved one's life in comparison to stealing from the company, I think they're going to choose stealing from the company. Obviously, poor personal credit is a huge one. You obviously don't want someone that can't manage their own credit and finances to be trying to manage your company's credit and finances. A bankruptcy. You think, okay, well, a person's filed bankruptcy. Well, they can't file bankruptcy for 7 years after that. So they're 2 or 3 years into their bankruptcy, and they're living beyond their means again, and they have to find a way to help cover those costs, because they don't really have a way out anymore. So that's something to be aware of as well. Also, if there's been a recent divorce, if anybody's been through a divorce, obviously, if you're paying child support, or you have spousal support or alimony that you have to pay, your finances can be significantly impacted by that. And so it's just, again, something to be aware of that could be a potential factor. The next set of factors we're going to look at are different vices that could be controlling your employees' lives. If they are alcohol abusers, or they have a drug habit where they're heavy into drug use, that's a very expensive habit to fund, and especially if they're trying to keep it from loved ones, they have to find a way to finance it. And so a lot of times they're going to look to the company to be able to do that, especially if they see a weakness in controls or something that they're able to exploit something and think that they won't get caught. Gambling addictions can also be a huge vice that obviously requires a lot of funding and financing to be able to fund that. And so, again, something to be aware of if you know that your employees are going to the boat every night to gamble. Definitely something that should raise your awareness there. Extramarital affairs. If you have a spouse who's keeping track of all the money, and you have to find a way to, hide some of those things that your employees potentially been exploiting. These are different ways that they have to fund it. So that's another one that you need to be aware of. The next set really focuses on just job dissatisfaction of your employees. If your employees, especially the ones that are key people in your accounting or finance department, or they're signing checks or taking cash in, if they feel unappreciated, or if they feel like they're not respected, if they have low pay in comparison with similar jobs with what they're doing, or if they've received poor raises, they don't feel like they've been treated fairly, or if they have poor relations with their supervisors and coworkers. These are all just areas that should heighten your awareness that there's potential for these employees to want to commit fraud. Some other factors are just plain out greed. If you have an employee that sees that the company's making a lot of money, the owners are making a lot of money, they're like, hey, I want to make that kind of money too, and it's just plain out greed, and they want what other people have. And also, it's just a challenge to get away with it. It could be something small up front that something doesn't get noticed, and maybe it was initially a mistake, but hey, nobody caught this, and hey, I can get away with it now, so I'm going to just continue to do it. Also, pressure from family or friends. Again, this could go back to medical bills or something else, but if you have a family member that's pressuring the employee to steal, that could be a huge motivating factor. Or pressure from coworkers, where collusion is really necessary in order to commit a fraud. You have somebody in your purchasing and receiving department that they have to work together in order to commit a fraud. One could be pressuring the other to do it because it's easy and they wouldn't get caught. So, again, just things to be aware of as you look at the different areas that could be potential motivating factors for fraud. Now we're going to talk a little bit about prevention. Obviously, each company is very different, and so I'm just going to kind of hit some top highlights on some things that you can do to help prevent fraud from occurring within your company. One is to just set a good example. Your management tone is huge when it comes to what your employees see and kind of following your lead. So if you're a business owner who has a lot of personal expenses that they run through their company, or you're doing things that really aren't above board, and your employees know that and they see that, obviously that's not a good example for them. So if they see that happening, they may think it's okay if they do that as well. And also just being supportive and respectful of employees. Mutual respect within a company goes a long way. If you have a company, or if you have an employee that respects you and you're supportive of them, it's going to make that employee's decision to commit fraud against you and your company that much harder because they feel that they're in an area that is supportive and respectful and they like their job. The next area we're going to talk about is just internal controls. And if you have an outside accountant or CPA, you're going to hear them talk about internal controls a lot, and what controls do you have in place. And I've heard it from some companies that are like, I just don't have a large enough, I'm not big enough to have 15 people in my accounting department to have internal controls in place to catch everything. The more common examples of controls for the misappropriation of assets that I talked about, most companies have a couple areas where they have been most susceptible to fraud occurring. And the majority of the ones that I've been involved in where I've gone in and had, to do any type of fraud engagement work have really been either on the cash receipt side or on the cash disbursement side. So on cash receipts, if you have one person that's taking care of the money coming in, they open your mail, they take the deposit, and they take it to the bank, and they're the ones recording your receivables. That person basically has a lot of opportunity to commit fraud because there's really no checks and balances in place to catch them if they're doing something like that. And so, you may say, well, I have to have my accountant do all this. If you have even a receptionist or somebody else on the inside of your company, you could have them open the mail and, have them independently set up a bank deposit, and then, your accounting people can still do all the receivable reconciliations and things like that. But that would be just something real practical that you could implement within your company to help, on the front end when the cash comes in so it doesn't get stolen. The other side, looking at the disbursements, I've had some business owners say to me, I sign every check that comes through my company. I know that nobody could potentially be stealing anything from me. Well, then I ask them, it's like, do you ever actually look at your bank statements to see if the checks that you sign are the only checks that are going through your bank account? And, I get this blank stare a lot of times, and they say, well, no, not really. So that's something else. It's like just looking at your bank statements. Have your bank statements sent to your house or, have them come to you first before they're ever opened. So you can look at some of those things to just look and see if there's anything unusual going through your bank account. Online banking is huge nowadays, and so companies, business owners can very easily get on and review their bank details online. And it's quick and easy, and they can do it in the morning before anybody gets in and, take a few minutes just to kind of review some of the disbursements that went out the day before and the things that have cleared to see if there's anything that looks unusual that went through their bank. So again, those are just a couple quick things from a prevention standpoint on internal controls that I was going to go through. Obviously, segregation of duties is huge. You're going to hear that a lot from your accountants. You need different people doing different duties. And even if you have a small company and you don't have enough people in your accounting department, again, there's still some things that you can do to help segregate some of those key duties to help prevent fraud. One thing you need to keep in mind is a high chance of detection will deter action. What I mean by that is if your employees know that you are looking over their shoulder and that you're aware of what's going on, that you review things, and that you're involved in the financial aspects of the company, that is going to deter somebody from doing something because, if they feel that they're going to get caught, they don't want to take a chance and do it. So, again, a high chance of detection will deter action. And again, management review, just make sure you're looking at things. When somebody brings you the checks to sign and you're actually looking at the invoices and kind of scrutinizing them just a little bit, especially for the larger dollar items, just make sure you're looking at stuff. Other considerations to keep in mind is, just making sure your people in your key areas are taking vacation and that you actually have somebody else do that job when they're not there. So if something is something funny is going on, that's going to get caught. Doing background checks of employees on the front end is huge because if you've had somebody that has stolen before and they've been caught and even prosecuted, if you don't do a background check on them, you're never going to find out that they did that, and they're likely going to be stealing from you as well. The other thing that you can do is fidelity bonding of employees. This is something that you can talk about with your insurance carrier, and this isn't going to necessarily prevent somebody from stealing from you, but it's going to ensure you in the event that they do that you're going to have some recourse with your insurance carrier, that you're going to be able to recover some of the loss. One of the biggest areas that a lot of companies don't really realize is how is fraud actually detected. And some people think, oh, well, if I have a accountant or something, they're the ones that typically would detect fraud. Well, the survey that was done by the Association of Certified Fraud Examiners, out of all the cases that they looked at, 40% of the cases were actually detected by an anonymous tip. And so there's actually different services that you can get, whether it's through a website or an anonymous 800 number, that your employees, if they suspect fraud, can report it. But a lot of times employees, because they want to do it anonymously without anybody knowing. They feel if they go to somebody in management that, okay, they're going to get brought out, and, they just don't want to get involved in it. So if there's a way and an outlet that they have, that they can anonymously report these types of items going on, they found that increases detection significantly. So in closing the presentation that I'm looking at here, if you've noticed customer complaints, vendor complaints, you have unexplained inventory shrinkage, unexpected or unexplained financial trends within your company, abrupt changes in employee behavior and lifestyles, or if you notice employees that are living beyond their means, or is it possible that a whistleblower has been trying to give you anonymous information, or have you discovered possible systems or control problems? You may want to consider a fraud engagement. Again, in connection with the preparation of your tax returns and financial statements, your CPA or outside accountant is not required to even consider fraud unless they provide audit services to you. So if you have a reviewer compile on your financial statements, they are very unlikely to be able to detect any type of fraud going on unless, it just happens to come to light. A lot of times, especially with reviews, they're asking the questions to the person that could be potentially committing the fraud. And so, of course, they're going to have different explanations as to why different things happen because those, you're not really looking at detailed information when it comes to those types of services. So if you think you're safe because you have, one of those other services done, think again. That's not the case. So I'm going to go ahead and turn things over to Marty now. That kind of concludes my section of the presentation. Marty?
Okay, Randy, thank you very much. That was very informative. I'm, again, Marty Beyer from the Sibley Law Firm, and I'm going to talk a little bit about, Randy talked about what do you do to detect fraud, and I'm going to do what do you do once you find it, what I call the OSHT moment, which is I jokingly refer to as an Amish contraction that is two words with O and a four-letter word that begins with sh and ends with IT. So OSHT. When you detect fraud, what do you do? Well, we put together a little checklist that was sent to you as part of your reminder emails. I don't think it's on the screen right now, but if you look in your email, you'll be able to print that and keep that with you. The first thing, of course, I always recommend is to call your friendly accountant. And why is that? Well, that's because the accountants can help expedite your investigation. He or she is going to know what documents to look for. An expert like Randy will have seen this before, knows which documents to look, where to look, give you ideas for other things to find, and then ultimately help calculate your loss. I'm sure many people, once they realize they are a victim, they want to know, gee, how bad is it? And the only way you can do that is to dig through all the papers and with your accountant and find that out. Secondly, I always suggest is to call your friendly lawyer. And why is that? That is not our law firm, in case you're wondering, that you see on the screen. But you want to call your lawyer because he or she can help you through the legal maze and ultimately get you your money. Not only get your collection plan in place, but start the collection process so you can quickly get your assets.
Marty, yeah, you make a good point there with just contacting the attorney. One of the engagements that I was involved in probably about a year ago, once we found out what was going on, we contacted the attorney immediately. Actually, the same day we had the attorney in, and we were able to set up basically assets the employee still had, and we were able to get those quickly transferred back to the company, and that was just through the attorney sitting down and signing some legal paperwork just to get that taken care of, and it was done immediately right after the employee confessed about it. So that's huge, getting the attorney involved right at the front end.
Well, as Ben Franklin said, make haste, not waste. And if there's ever a time to do it, it's when you find embezzlement amongst you. Also, as part of your investigation, if it takes a while, you want to grab all your internal documents, again, with your help of your accountant and your lawyer. Again, what's missing and where to go, how can you do that? Some of the documents we'll show you here on the screen is a case that I have in representing a bank. where an employee was a loan officer and got a bunch of fraudulent loans in real clients' names, but had the actual statements mailed to a post office box that she and her husband set up. As you can see, it's to Dell and Associates, CFP Inc. They tried, of course, to throw the bank off and say, oh, okay, well, gee, this in this case was a doctor. Doctor's taking out a loan and having the accounts, have the statements sent to his or her financial planner. Well, financial planners don't typically do that. This is something that was missed within the bank. But again, having found it, this is what they were able to do. Next document, for example, is a check, a company check, where the perpetrator actually paid his wife's credit card bill. And as you can see the picture, he was kind enough with these company checks to handwrite her name and her credit card number. So when the good folks at Wells Fargo got the check, they knew exactly where to apply that check. So again, you're going to have to pour over all your company checks, all your internal documents, but it's a lot of times just sifting through a massive information, but it's something you'll need to do if you want to get your recovery. Another case, the guy was kind enough to write himself a check, and he forged the client's signature, flat out forged it. And in this instance, there were two employees that needed to sign the check. He just forged the owners and got someone else to unwittingly sign. Also, of course, you want to have your sit down with the suspect. Now, I always recommend that you, of course, do this as a surprise to them so they can't start thinking of what they're going to say. I also recommend that you have two of you and one of them. That is, you, if you're the managing person, along with someone else to serve as a witness against the one person. Now, many union contracts give the employee a right to have a union representative. So if you're in a union situation, you might think about that. But otherwise, have two of you and one of them. I also recommend that you have an outline set up. And why do I do that? That's because you're going to be so jacked up, you're going to be so upset that you're going to forget a bunch of stuff, and you really want to reach across the table and grab the person by the throat. Obviously, you don't want to do that. So if you have an outline, that will help you get the critical information that you need. You want to get their admission or their promise to repay. If you don't start out and accuse them, just simply say, look, we know what you did, here's the evidence, and drop the documents on the table, show them, and say, we're going to talk about how you are going to repay us. If the employee says, okay, here's how I'll repay you, well, that's an admission, because why would he or she promise to repay you if he or she didn't steal from you? So if you don't have the admission where the witness breaks down in the stand like they always do in the movies, that's okay. Just get what you can. We'll even give you an example here of a case where this was an exit interview, where the employee basically he wrote that, well, what he did was he claimed he took an advancement of his yearly bonus, which he was taking money in February. Of course, he didn't get his yearly bonus until December. So that document itself was evidence that he had stolen from the company. So get whatever you can. And then suspend or fire the employee. If you're going to suspend them, I would suspend them with pay until you're ready to can them. And then once you fire them, then do it and tell everyone what you did. Now, a lot of people ask me, do I have to send them COBRA notice? Technically, you don't. COBRA does not require you to offer continuing coverage from a departing employee who has stolen from you. I, however, generally recommend that you do it only because you want to be completely above board, completely partial, and there's probably kids involved. And it really doesn't cost you anything if the employee pays it. If they have any retirement accounts as part of the agreements to repay, if you can get that again, make sure that they assign to you all their retirement money, their IRAs, 401ks, pension profit sharing, whatever you have. Make sure you get that in their agreement to fork it over to you, because you can't collect it otherwise. You cannot garnish it, for example. You can't sue for it. The only way you can get their retirement money is through their voluntary help. Now, some people ask me, well, gee, what about defamation? What if they go out and find a new job somewhere? What do I say? Well, I like to tell people it's always good to tell the truth. So if somebody fired from you, or you fired them from stealing, then there's not a problem telling that to a new employer. Can it get you into hot water? Well, possibly, but on the other hand, if someone stole from you, they're going to steal from somebody else. I was just, in fact, talking with a banker on Friday who was so upset that she had unwittingly hired a teller and fired her because she had stolen from the company, only to find out that she had stolen from 2 prior banks. So you kind of want to nip this in the bud. Case in Miami County, I believe it was this year, an employee embezzled a substantial amount of money, and while she was awaiting sentencing, got a job at Marshall's department store, and then she got into them for over $8,000 just by doing false exchanges. So if someone steals from you, they're going to steal from someone else. If you're ultimately gun shy about telling any new employer what happened, then simply say, well, the person no longer here and will not be rehired. That will pretty much do it. You want to, of course, when you meet with this person, thoroughly document everything that was said and done, so it'll come up later on. And if you decide to terminate them right away, gently escort them right out the door. Let them collect their personal belongings, any purse, wallets, book bags, whatever. Do not let them hop on their computer. Even if they say, gee, I just want to shut it down, don't let the employee do that. Chances are they're going to start hitting the delete button left and right. It's just not going to happen. You also want to block any outside access. In these days of great technology, we have the joy and privilege of communicating with our offices from anywhere, even if you're on vacation in the North Pole. So if someone can run home and type into the system and delete a bunch of stuff, you obviously don't want that. So make sure you block their outside access to the computer system. Now, next thing, of course, and these really don't have to be in the same order. Next, for example, is we talk about interviewing co-employees. You may want to do that before you talk to the employee, and if you do, keep it absolutely confidential. But in talking with the co-employees, you want to try to find out what the employee has been up to. Randy talked about, personal problems, bankruptcy issues, and stuff like that. There was a case here about 2 years ago where a couple in bright and charming Oakwood embezzled almost $300,000. They had filed bankruptcy a year before they started embezzling. So if you can find out what the employees are up to, that will give you a key as to what they were doing, why they were doing it, and most importantly, where can you collect some money. In one case, for example, a husband of the crook paid over $85,000 cash for a Land Rover. Now, who does that? Maybe Bill Gates does, but not too many people in this area do. And the employee was just telling everyone, yeah, my husband's doing real great in the real estate business. Well, as it turned out, he was doing real great because she was stealing from the company. So you want to find out what it is they're up to. And another example is business loans. One case, a guy had a side business. Well, he stole a bunch of money and used that money to pay off loans that he was personally guaranteed on. So, again, you'll find these kind of things, what people are up to, why they're doing it. We're going to talk about suing people. Also, hop on Facebook or any other social media. It is incredible what people post on there. If you're not a friend or if they don't have access to the whole world, then, talk to one of your employees who might be a friend of someone on Facebook and see if you can scroll through about what they've been up to, if they've been on vacation, living in fancy resorts. It really is incredible. Even some of my family divorce cases, it's amazing how stupid people can be. So that is all good stuff to find out for you. So you've gotten the person fired, you've met with the accountant, you've got as much information as you can, and by the way, most of this really should happen in a very compressed time frame. So you want to sue. I always recommend, if you can, to sue the spouse as well. Why is that? Well, chances are the spouse is going to know or be willingly blind to the truth. I mean, most people don't increase their family income by 300% without something being amiss. Also, many assets could be in the spouse's name. So you don't want them taking that money and hiding away with it, giving it to Aunt Hilda or something like that. When you sue, you can get an immediate court order freezing their assets, freezing their bank account, for example, getting a court order preventing them from selling their house, selling any real estate, selling any cars, or even borrowing against their house. If there's some equity in the house, you want to freeze that so that once you get, so you can collect from them. As part of your process, you're of course going to subpoena all their bank account information, all their investment information, follow the money trail, where to go, how much can you really collect. Ultimately, you'll get an agreed judgment. Why are they going to do that? Well, they're going to have the criminal process hanging over their necks, so most people are going to agree to judgment. It may take a while, it may take forever, but you'll eventually get your judgment. Now, we have a pretty good question right here, and it is, can a thief file bankruptcy? Suppose someone steals from you, can they turn around and file bankruptcy and scrape off that debt? Well, they can file, but the bankruptcy law does not allow anyone to ultimately scrape off debt that was incurred by fraud. Okay? They can buy time, there's no doubt about that, but ultimately they are going to be on the hook to you. I talked about getting some documents. In this case, we went and got the crook's credit card statements, and I created this little chart, and you can see what they were doing. They were traveling to Vegas, and for example, she went to Nordstrom, spent like $4,600 in 2 days, stayed at the Venetian Hotel, not exactly a Motel 6, so they had a lot of fun on the company dime. Now, another reason I had mentioned you want to sue right away and tie up all their assets, you can see down here, what did she do? Well, she advanced $25,000 on her credit card to lawyer up. Okay, so she not only stole from the company, she got a lawyer to help her out and to defend her. If you can tie up her assets, and I realize you can't tie up everyone's credit card right away, but if you can tie up whatever you can, that's going to be less money that they can use to pay a lawyer. They may have to go to their parents or someone like that, and it just makes it harder for them. And of course, the parents are going to ask, "Gee, why are you trying to borrow $25,000 from me?" "Oh, gee, I stole from the company." Well, maybe they won't do that. Now, Randy briefly mentioned insurance claims. You're going to have to contact your insurance agent right away. Your insurance policy is probably going to have some coverage. It will also, you've got a duty to cooperate, and part of that is keeping them apprised of what you're doing with your investigation. The insurance company can also do a nice job of helping you prevent this in the future. In conjunction with your accountant, they'll train your employees on how fraud is done. That policy is typically called, as you see here, an employee dishonesty policy. We have that. We were able to collect some money from our stealing employee. Didn't of course get a full recovery, but at least something's better than nothing, and that's why you pay that. Question a lot of people ask is, do I have to file criminal charges? well, your insurance policy may require it. If you want to recover some insurance money, then you may have to file charges. Next thing I have here is in for a penny, in for a pound. And really what I mean by that is the prosecutors who you're going to talk to, they don't want to be your collection company. They want to make sure if you're going to file charges, you're going to stick through it, because they don't want to go through an indictment, interview people, do a boatload of subpoenas, only to find out that you think, well, gee, I got my money back, I really don't care anymore. No, that's not going to work with the prosecutors. If you're going to prosecute, you're going to prosecute. Many people, in fact, we thought of it ourselves, is there a public relations issue? Will the public or my customers, clients in particular, think any less of me or my business because I had someone steal from me? And that was great debate that we had within our firm. No, I really don't think the public's going to think any less of you. In fact, we had overwhelming support from our clients saying, gee, we're sorry this happened to you, it's tough. And they didn't think we didn't lose any clients over it. We didn't have anybody think any less of us. They know that we're great lawyers, and you and your business are going to be true to your customers. So I don't think the chances are nothing's going to happen in the public. Most people never. The retention spans anyway is pretty short. Finally, throughout this whole process, you need to keep up morale with your employees. Still need to be a leader. You have co-employees are victims too. There's the folks who are coming in every day, working hard, being honest, staying late, not taking expensive vacations, not putting pools in their backyard. And they really get irritated when they do the right thing and someone steals from them too. Maybe that they don't get bonuses, for example, because of someone stealing. So keep up morale within the company. It's going to ultimately make you stronger. You will take some body blows, but you'll come back a better, more focused, and more lean organization. That is it for my section of the program. We do have a question, Randy. Can you see the question?
Yeah. Actually, it was a comment by one of our audience participants, and she just wanted to point out, and this is a good point, that the problem with background checks is that they are almost always state and county and do not reflect federal crimes unless you run a GBI check. That's a very good point, and you just need to make sure when you are getting your background check, the service that you're using does check for the federal crimes as well as your state and local crimes. So thank you very much for bringing that up. Right now, we are going to open the floor up to our audience members for any questions that you might have. I know we gave you a lot of information, but if there's anything in particular that you would like to ask Marty or myself, please feel free to do that at this point. If you want to go offline and do that, I believe you have our contact information on the front slide there. You can also just email us directly or give us a call. But if there's anything from the audience right now that you would like to raise a question that we could share with the other members, please feel free to do that right now.
And while we're wrapping that up, I'll go ahead and give the closing statements. I want to thank you for attending today's webinar, and we encourage you to participate in future webinars in our Winning Business Strategy series. For further assistance, please contact our experts, Marty Beyer and Randy Domigan. Their contact information, as well as other items of interest, can be found on their respective websites, Sibley, Shillitoe, and Dyer at www.ssdlaw.com and Bradyware at www.bradyware.com. In addition, a recording of this webinar will be posted on both websites.
We do have a question. It's a great question, and that is, was our firm were we made whole on the fraud? We calculated that we lost pretty close to about $296,000. She was prosecuted at the range of about $280,000. Short answer is no, we didn't get made whole. We got, I think our insurance money was about $70,000. We collected approximately $35,000 from her retirement. She signed that over. We didn't get anything out of her house because that was fully liened up already. She really had no other cash. She was spending everything she had. I think that we kept TGI Fridays in business for 2 years for that reason. But no, we did not get made whole. But we certainly got what we could, and we appreciated all the help that our employees gave and how they stuck it through with us and all that. So good question. Another question is, what is the cost? And I suppose, Randy, that's for you as well as me, but it really depends on the size of the engagement and how far in depth you want to go. We ultimately had to cut it off at some point, only because it was the point of diminishing returns. And so it really depends on how far you want to go. Every time we had a new report, the number just kept getting bigger and bigger, and ultimately kind of slowed down once our poor folks in the accounting staff.
Yeah, no, that's a good point, Marty. You know, as you said, there's going to be diminishing returns. And, you know, I've had some cases where it was fairly cut and dry. We were able to pinpoint exactly where they were doing it. We checked some other areas. But, you know, if you've only got so much that you know you're going to be able to collect, you kind of do have to cut it off at some point. And, you know, all those things are discussed on the front end, you know, when an engagement like that is undertaken. And, you know, there's obviously constant communication with the company owners during that type of process to make sure, you know, the communication lines get kept open.
Another question is directed to me, Marty Byer, and that is, were you able to successfully sue her spouse? And that is, did we sue our employee's spouse? We did sue. Unfortunately, shortly after we sued, both she and her husband filed bankruptcy. Now, she was kicked out of bankruptcy because, again, you can't scrape off debt, fraudulent debt, in bankruptcy. You know, I will go to my deathbed thinking that the husband knew about what was going on. He just played stupid. We fought it for a while, and ultimately he was able to scrape it off. He included us in part of his payment plan, but he really didn't have a lot of money, so we got a little bit of money out of the bankruptcy case. But her husband, of course, has a stained reputation now as well, as his wife. But no, we weren't. We sued, but did what we could.
Okay, this concludes our webinar, and we thank you for participation. And just a reminder, the recording of this will be posted on both websites. Thank you.
Thank you very much.
Thank you very much. Appreciate it.